Good, good morning, good morning. Welcome to the Morning Blast. Myself, Ryan, and of course, Michael. It is Wednesday, the 18th of March, all day. This is the Morning Blast with the most candid takes on markets and geopolitics, etc., etc. Disclaimer: nothing said on the podcast is trading or investment advice. Nothing we say should be taken with any kind of, I don't know, what's the word for it, Michael? But any respecting person wouldn't be listening to us. There you go. Obviously, I'm jesting. Hopefully, you put a smile on your face, though, and hopefully put a bit of value into your day. Obviously, there's no editing that goes on these. So if you are listening to it on the playback, yeah, it's you take us as you find us. We make no excuses for swearing and going off on tangents, etc. Think of it as bar side rather than fireside. But Michael, how are you?
Indeed, yes. Very good morning to Ryan. Good morning, everyone. The sun is shining. Happy Fed Day. Happy BoJ, ECB, BOE, SNB, Riksbank Day Eve, everybody. We get a sort of temporary reprieve from following geopolitical headlines over the next 48 hours and instead get to hear central bankers regurgitate those geopolitical headlines.
Do we, though?
For us. Well, I'd like to hope so. Spring's eternal and all that.
Well, I'm not so sure, but
you seem rather downbeat this morning. Yesterday you were rather chipper. As your Lemsip overdose worn off?
Yeah, I think I'm on a Lemsip come down, to be honest.
Oh dear.
Yeah, not slept very well last night. I'm not feeling great, to be honest. Yeah, so stay on alert for deleting my hard drives if you wouldn't mind, please. Oh. But yes, speaking of deleting hard drives.
Well, I'll tell you what we do need to delete, which is Clive's fucking Elliott Wave nonsense that he's thrown our way this morning.
Yes, yeah. Less said about that, the better. Just as people are starting to accept that technicals might have a place in these markets, he goes and does that. But no, we jest. But anyway, an update from Clive, our good friend Clive Lambert over at Futures Techs, for obviously market levels and what happened yesterday in the markets. Lots of things going on, obviously, as Michael said, not just Iran, but obviously a shed ton of central bankers. And then obviously later on this week, we've got expiries of quad and triple, which depending on what products you look at. But yesterday, S&P saw green after retaking its 200-day simple moving average way on Monday. Were bid overnight, so dusting itself off nicely. Ditto for the Dow, Nasdaq, etc. DAX over in Germany is back above the Fibonacci retracement. So back over the Fibonacci reference at 23,729 this morning, which should cheer the bulls. FTSE futures also bid above the 10,359 level that we were keeping an eye on of late. Bund futures put some green on the chart, as did T-notes as we go into the Fed and ECB meetings. Dollar weakened again for the second day in a row, so euro dollar has rallied away from the key supports at one spot 13.91 and one spot 13.67. Bitcoin didn't spend long above the 74,500 level that we've been watching of late, so we'll see if the bears get busy again there. Gold, the yellow metal, and silver both posted doji candles like they did on Monday, so moving around but just going sideways. So taking a pause, a bit of a blow there. LME copper set a weaker tone and is eyeing support at 12,583. That's got to turn around and get higher for me personally. Even oil markets seem to have settled down somewhat this week, as we've spoken about the last 2 days. Are people getting a bit fatigued with headlines, etc.? Volatility-wise, it's starting to, maybe the worst of the volatility shocks is over.
Oh, don't say that.
But maybe I've jinxed it on purpose. So I want to get a bit of action. May is obviously now the front month for WTI, and overnight we've dipped to Fibonacci support at 91.32, where the buyers stepped in, something for the bulls on the chart. Gas oil, which is, as you should know by now, is basically European diesel almost, but it is. Saw green yesterday, and 1,152 is now the Marubozu support. Henry Hub failed recently at Fibonacci resistance at 3 spot 275, has been selling off ever since, down to 2 spot 923 overnight, where the ship is steady for now. TTF, which is obviously think of it as the European equivalent of Henry Hub, is hanging around at 50 to 51. Is 50 the new 30? Clives asks. It's a question that's been pondering in reports to clients, etc.
Do you know what? I was up all night asking myself that. Is 50 the new 30? I just could not get that out of my head.
Well, I'm hoping, age-wise, I'm definitely hoping that that's the case. Because,
mate, I'm not gonna lie. I'm selling you reaching 50.
Well, people were selling me reaching 30 back in the day, so So
This
there's a
is
lot of
true.
look, there's a lot of people that have been caught short, by the short man. So there you go.
Oh, very good.
There you go. EU carbon markets, they sold off again down to 64.93, where we found some opposite trade at a round number. Wheat, that broke 594.5, a short term Fibonacci support, which says we head to 565.5 next. Finally, from Clive, soybeans broke support at 1,162 on Monday, yesterday to spike to 1,170.4. That found sellers to keep this pointed lower in the short term. But that's it from Clive and from me for the time being. So thank you very much, Clive.
Good. Thank you, Clive. Thank you, Ryan. You go and have a lie down and neck some lemon sip while I get through the next bit, mate. I think you're right to say that the market does seem to be getting a little bit fatigued, maybe a little bit bored of geopolitical news flow. I mean, to be very, very clear, the situation has not changed. The Strait of Hormuz is still essentially impassable. There has been little to no sign of any de-escalation or of any diplomatic off-ramps being taken, and kinetic action continues. Actually, one of the main headlines on that front is that Iran's top security chief, Larijani, who was one of the guys conducting a lot of the negotiations with the US, he has now been killed in an airstrike. So continuing to take out not only military infrastructure and missile launchers and factories and that sort of thing, but also continuing to target the top ranks of the Iranian leadership. It must be said, though, that not only have markets got a little bit, maybe bored is the wrong word. I think desensitized is perhaps a better way to frame it. And this is something that we had alluded to the likelihood of a short while ago. We often see with these geopolitical conflicts, I think, Ryan, you mentioned this, where headlines have to become bigger and more severe to have the same impact and the same market reaction the longer that things wear on. And obviously, that's not to diminish the human cost of what's going on. But if you look at what's going on between Russia and Ukraine, for example, that war is now in the 5th year. Almost any headline regarding that conflict is just completely shrugged off by the market. Whereas 4.5 years ago, when it started, we were getting a big reaction from the news. And I think that's exactly what we're starting to see pan out right now. The other thing I would say, and this is purely anecdotal, so do take it with a bit of a pinch of salt, but I think the actual volume of incoming news has decreased a little bit as well. Just in terms of, the number of squawks you're getting, the number of Bloomberg alerts that are coming through. I don't want to say it's calm because there is still a torrent of headlines, but that torrent is slowing a little bit compared to where we have been in, this time last week, for example. So the geopolitical situation isn't over. This isn't resolved by any stretch. And in fact, Trump was saying yesterday that there could be a couple of weeks to go, not much longer, et cetera, et cetera. But from a market perspective, I think participants have de-risked enough. They've discounted what they want to discount and are now in kind of wait and see mode for what happens next. Is there a renewed escalation? We hope not. Or do we see progress towards a de-escalation? I guess that's kind of the juncture that we're at this morning on day 19 of the conflict.
Yeah, no, exactly that. And, maybe that does give participants a chance to look at and focus more on central banks, what's going on this week. So maybe, the timing is great for that. But, what's going to happen now during this statement or during a presser or whatever. There's going to be something big kicks off. But no, it's not an unknown thing for markets to do, which is just kind of, start be desensitized to headlines and whatnot. And we've seen it play out recently on a number of events, noticeably Russia, Ukraine and stuff like that. And it's exactly what we're seeing now.
Yeah. I think it's important at this point to think almost mechanically about markets because, a lot of people are going, well, why are stocks not still selling off? Well, it sounds silly to say it, but there's only a finite amount of selling that can actually take place. If you're running a portfolio and let's just say you hold 100 shares across that portfolio and war breaks out, you sell half of them. A week later, there's no resolution, you sell the other half. Well, into the second week of that conflict, even if it's still going, you haven't got anything left to sell. You've de-risked to a degree where actually you're on the sidelines now. And I think that might be factoring into it a little bit as well. The fact that the news flow hasn't got materially worse, hasn't got better, but it hasn't got materially worse over the last week or so.
Yeah, but you can short sell.
You can short sell, correct. But in terms of real money flows, they're not going to be doing that.
Well, okay.
So, yeah, I think that's, it's not over. It is still going on.
No, of course not.
We're not trying to diminish that whatsoever, but it does just feel, as if markets are trying their best to move on from things. Stocks rallied for a second straight day yesterday. We're up for a third session this morning if we hold on to those gains. The dollar's started to roll over a little bit. Crude benchmarks trading just a little bit softer, although you obviously got the contract roll in there that's skewing things a bit in WTI. So, yeah, it's interesting because I think we've gone from panic to wait and see is, I guess, how you can frame things.
Yeah, no, exactly that. Exactly that, my friend. Yeah, well, look, for once, there's not really too much new information to talk about the Middle East. So let's look at what we can chat about and what is quite important today. And any other week of the year would be seen as the most important thing of the week, which is the FOMC announcement.
Indeed, and slightly sad and emotional because it is Chair Powell's penultimate press conference at the helm of the FOMC. And as the chairman of the J. Powell fan club, total membership 1, it's a sad moment as that comes
Oh
to
no,
an
I've got my badge. I'm a paid up
You've got
member.
many badges, mate, but we shouldn't talk about those on here.
They're tags, not badges. No, I'm a paid up member of the Powell supporters club. So there you go.
Oh, good man. But yeah, I mean, I think we'll do the Fed first, and obviously we've got the Bank of Canada later on today as
No
well.
one cares about that.
Well, the Canadians probably do.
Probably not, to
And
be
then
honest.
we've got the Bank of Japan overnight. But in terms of the Fed, we are expecting the Fed funds rate to be unchanged between 3.5% and 3.75%. That, though, is unlikely to be a unanimous vote. Ryan's best mate, Governor Steve Myron, he is set to dissent in favour of a 25 basis point cut. We are also potentially going to see dissent from Governor Waller. He obviously dissented in January, and in his recent remarks has been very much on the idea of team transitory, looking through energy prices, focusing on labour weakness, etc., etc. And potentially Governor Bowman as well. She's been focused quite heavily on the employment backdrop and also recently said that she sees a path for a total of 75 basis points of easing this year. So still some dovish dissent coming through on the board, but not enough to alter that rate decision. The rate decision itself, though, doesn't really matter because, and this is a common theme among all the central banks going to hear from over the next 24, 48 hours. It's the guidance, it's the commentary, it's what they have to say about the policy outlook and the economic outlook that really matters. And on that front, I think in the Fed's statement, the economic assessment is likely to be broadly unchanged. Still a solid pace of expansion, job gains remaining low, inflation somewhat elevated, etc., etc., etc. But I think it's highly likely that they add in a line to that statement referring to something along the lines of increased uncertainty around the future outlook, potential inflation risks posed by higher oil prices, language just alluding to how not only the geopolitical situation, but the economic situation has changed considerably from where we were 6 weeks ago when they last met in January. And I think Powell is probably going to say similar at the post-meeting press conference, but he's not going to want to kind of box himself in terms of any particular policy path, not least because he might not actually be there to deliver that. I think the key thing to watch at the press conference is at the last 2 meetings, journalists have asked Powell whether a rate hike is under consideration. And at both of those press conferences, Powell has said, and I quote here, that is not anyone's baseline scenario. So given where the market is priced with just 125 basis point cut in the curve by year end, that is probably the most potentially newsworthy line if Powell changes his language around that at all.
No, yeah, completely agree, my friend. Completely agree. One thing to add on the dot plots, because people get very frothy over these.
Oh, I fucking hate the dots.
Is remember that people seem to forget that dot plots can move. The reason why the dot plots get updated is because it's simply the FOMC members what they predict to be the situation from where they stand right now.
Yes.
So they're not a prediction. They're not like this. They're not set in stone. And this is why dot plots move. But what we see is we get so many people, I think, overanalyze and say, "Oh, this, everyone thinks that this is going to happen, in like 8 months, a year out, 24 months out, or whatever." Yeah, but that's based on the current stuff. This is current inputs, the current data.
Mm-hmm.
The data changes, their dot plots move. It's not the other way around. But so many people seem to get caught up in the dot plots and think that this is set in stone where rates will be in X number of months' time. And and it's not just kind of newbies that kind of see this. We see kind of quite experienced people. I don't know if you've noticed it as well, that just kind of look at the dots and say that this is what the Fed are planning to do. Well, yes, based on this is like gun to the head. Can you make a predictions kind of stuff? I'll give you a clue. I bet most FOMC members would rather they didn't have to make dot plots.
Oh, absolutely. And it is, I wrote a note up about this quite a while ago now in terms of some of the things that Kevin Walsh has said around what he might do when he takes over at the helm of the Fed. And he is actually a big fan of less in terms of projections and dot plots. And I would not be at all surprised if he ditched the dot plot, which Bernanke obviously introduced. And I think that would be a good move because you're absolutely right. A lot of participants, and even experienced market participants, look at the dots as this kind of concrete guidance as to where the Fed funds rate is going to go. It's actually not. It's simply a case of 19 members, or will it be 18 this time around because Raphael Bostic has retired. But the entire committee sitting down and basically saying, based on what I know right now, here is what I would do based on how I think the outlook will evolve.
Yes.
Now, at the best of times, that's a fucking difficult exercise because predicting an economic outlook is not exactly easy. Otherwise, we'd all be doing it and making a shed load of cash out of it. At a time like this, when the economic outlook could change in about 5 minutes' time, depending on what Trump puts on Truth Social, and that's not an exaggeration, the dot plot is... it's about as useless as, I don't know, a chocolate teapot or something like that. It holds no value in terms of signaling whatsoever. And I would expect that at the press conference, Chair Powell very much stresses that we should not be placing too much, if any, weight on the dots because it's not a concrete path and you simply cannot put forward a concrete path at this point anyway.
Yeah, and this is it, right? And market hates unknown, and also economists and journalists that are looking to the Fed will hate the fact that the honest answer is we don't know what the future brings. But that is the truth. Sometimes
it is indeed,
and this is why sometimes you hold firm and you hold pat and you just kind of say we'll see what the data brings us. Now, journalists and some economists and some people, like some people on social media and that, will hate the wait and see approach, but in times like this, it's the only approach that you can do.
It is the prudent way to do things because there is so much unknown, and I know I keep using that word, and uncertainty, I get using that word as well, around what comes next. And just on that, the same applies for the projections themselves. Take those with a bucket full of salt because, again, the outlook could change on the next Truth Social post. You would expect higher inflation in the short term, modestly slower growth in the short term, purely on the back of higher energy prices. But again, there's almost no signal whatsoever that the market is going to be able to extract from the projections or from the dots. I think what we really need to listen to is the statement and, more importantly, what Chair Powell has to say. And what Powell has to say will likely be something along the lines of, we are attuned to risks on both sides of the dual mandate. We will respond. We will act as appropriate to ensure that we achieve that dual mandate over the medium term. And I would not be at all surprised if he repeats that line over and over and over again and tries to get the presser done as quickly as possible because there's not a lot else he can say at this moment in time.
Yeah. Not my concern. I'm also waiting for a couple of real fucking stupid questions about almost, you remember we've had questions in the past, normally for the ECB, about what they're going to do regarding climate change and stuff like this.
Actually, sorry, that I sound like an ape there, but that has actually reminded me. Did you see what
Lagarde
posted yesterday?
Yeah.
For anyone who is unaware of this, the ECB Governing Council began their deliberations yesterday evening, and they started that by watching a film about the ocean and discussing climate change and sustainability. Not like there's anything more important going on, lads.
Look, we're not saying that nature isn't important, but the ECB, they should be focused on the economy at the moment. If I can get in their own house in order, but yes.
Yeah.
But what I was trying to get at was, I wouldn't be a bit surprised if we start seeing some journalists asking, Powell his opinions on what's going on in the Middle East and stuff. Which there's if that's just a wasted question.
Yeah, I agree. And I think, a lot of it's a difficult one because, the journos are there and their job is to effectively try and get news out of the press conference. And the fella giving the press conference is trying not to make news,
Yeah,
is the fundamental dynamic. But yeah, I've long said that journos who ask stupid questions like that, anything to do with the legal issues that are going on, what do you think of Kevin Walsh who's coming in to succeed you? Just take their press pass away. Don't let them into the press conference anymore. They should lose the right to ask a
yeah,
question if they ask stupid things. Mm,
yeah.
but as I alluded to a second ago, we do have another couple of policy decisions over the next day or so, just very briefly. The Bank of Canada. Oh, sorry. One last thing on the Fed, actually. For anyone in Europe or in London particularly, the FOMC decision is an hour earlier than usual because of the
Yes.
clock's change in the States. So we will be getting the decision, the statement, the SEP at 6 o'clock London time
Good
this
shout.
evening. And then Powell's presser will start at 6:30. Do not let that catch you out if you're here in London. I have heard horror stories of that catching people out before. It's almost caught me out on a couple of occasions. Do not be the one who is sat there thinking the Fed is at 7. It is not. It is at 6 o'clock this evening if you're in London. If you're on the east coast of the States, it's at 2 o'clock as normal. So yeah, just a bit of housekeeping on that front. Very quickly, the other couple of decisions, the Bank of Canada, that's at 1:45 this afternoon, London time. They're expected to hold rates steady at 2.25%. Again, obviously, focus is very much on their guidance. What are they going to do in light of the geopolitical uncertainty? The other issue for the BoC is they had a disastrous February jobs report last Friday, the economy losing well over 80,000 jobs, unemployment up to 6.7%. They also had softer than expected CPI figures come in on Monday, headline CPI at 1.8% on a year-on-year basis. The market's still pricing in 33 basis points of hikes from the BoC by the end of the year, so one to keep an eye on there. And then overnight, probably around about 3-ish in the morning, Thursday morning, London time, we hear from the Bank of Japan. Again, expected to stand pass on policy, holding rates steady at 0.75%. Focus for the BoJ will be, again, what they say in terms of guidance. They've been saying for some time now that they will continue to increase interest rates if their economic outlook is realized. Sources, stories in Japanese press have been signaling that April is potentially the next live BoJ meeting. So obviously that's very much going to be the market's focus as we move through the Asia session. And then tomorrow we've got, as I alluded to earlier, SMB, Riksbank, BOE and ECB, but we will get to that nearer the time.
Exactly that, mate. Exactly that. Yeah, for once, I think we can wrap up a little bit early.
I think we can. I
So
think we've been very punctual there for a show.
yeah, I don't think there's really anything else to really go on about. Is there anything we're missing? No, I don't really think there is.
No, I don't think so, unless people care about US PPI today, but that really doesn't matter.
No, I don't care about it. You don't care about it. There we go. But yes, okay. So, Michael, thank you so much for today. As always, listeners, thank you so much as always for tuning in. Hopefully, you put a smile on your face, a bit of value in today, etc. And yeah,